Evening, ladies and gents. As you are coming in, please, if you can see my screen and you can hear my voice, please raise your hand on the Zoom application so that I know we're in business. If you can see my screen and you can hear my voice loud and clear, please raise your hand on the Zoom application or send me a text on the Q&A or chat box. I'm not seeing hands coming in. Not sure if you guys. Brilliant, Mario. Thank you very much. Evening, ladies and gents. It's the 26th of January. Njabulo Nsibande here. Simon won't be joining us today. Doing his radio show. He's not in any positions. We'll have a look at the latest, at the 721 trades in a moment. This past week has not been a great one. I've been stopped quite a lot, unsurprisingly. The market had a huge sell-off, particularly at the beginning of this week. Just this week's alone, I think I got stopped, let's see, about 8 times. Only 2 of those trades were profitable, being the Citrix 40 trade. It got stopped out there. And the Capitec trade, I took a really small profits on both trades, most of them being small losses. Sapi, Aspen, Real Bafokeng, Netcare, Remgrow, Mondi, Woolies, Richmond, Bidvest, ABN Bev, Telcom, and Transaction Capital. At the moment, the portfolio is sitting with 21 trades. 6 of them are in profit, giving us a hit rate of just over 28.5%. And 15 of those trades, 71% of those are still in red at the moment. However, the average return on these trades is up 13.95%, and the average loss so far is just under 1% at 0.92%. And the R multiple been 15 to 1. And the largest win being that MTN trade sitting at 62%, at 5.5, just over 5,500 rand. And the largest loss so far, excuse me, losing us 1.7%, and the extremes between the two being 36%, looking fairly decent. Let's look at as I said, the market wasn't too great this week. Expand that a little bit. Starting off with clicks, got stopped on that giant red candle there, closing below that 50-day exponential moving average. Perhaps to come back to bounce around that 280.68 level, but I do suspect that this old resistance level around the 200-day exponential moving average will hold and see the stock bounce back higher. But we'll see as the price as the days go by how the price action works but I think we'll hold some support around that old resistance there at 286. Telcom, I got a hit on a gap. We had a gap on the at the open. I got stopped out, breaking those higher lows, making a lower low, closing opening rather below that 200-day exponential moving average, but closing above it. So we'll see if looks like that old support held. But I'm going to wait for it to come back above that 54 rand level before I can jump back in this trade. It's been quite volatile. It has stopped me out quite a lot. As you can see, the trends don't seem to kick off. It does go make higher lows and higher highs over the long term, but there's a massive bit of volatility, and we need to work the trade a little bit better. I've looked at the trend line there. Now we could see the stock come back to retest that support there. But we'll see in time. But for now, I'm going to wait for a close above that 54 and 54 and level. Guys, if you have questions, feel free to pop them in the Q&A box or the chat box. If they're not time sensitive, I'll see them at the end. If they are, I'll just get to them right away. I also got stopped on transaction capital as it closed below the 200-day exponential moving average. I'm waiting for it to come back above 46 to jump back in with a rather tight stop there around 42.20, just below those lows there. But we'll see on transaction capital there. So I got stopped on that candle there. The stock, the ETF closing below the 30-day exponential moving average. Should remember the stop losses closed below the 30-day exponential moving average. So it gapped out in the morning. I got a slightly better a price than the previous close. So I'm waiting for Citrix to trigger again, closing above that 15-day exponential moving average. It did come quite close yesterday, rather today. So I'm going to wait for it to close above that 50-day exponential moving average, triggering a buy, and then I'll wait for a confirmation on Citrix 40. A Bitvest closing below that 50-day exponential moving average as it stops me out there. It's still pretty range bound, so I'd rather wait for it to come back above 201 because I don't think it's gonna do any significant move in between that range. So I'm just gonna wait for a close through that 201 level because it looks like it's still stuck in a range. AB and Bev, I had my stop. Where did I have my stop? I had my stop somewhere here. I got touched on that candle there. So I'm going to wait for it to come back at above the 1848 to rebuild this position. We did have a golden cross. So I'm going to have to wait. If you zoom back out, it does look like it's basing at the moment. So if you can break that resistance level there, there's plenty upside that we could target if the stock breaks through that resistance. That look like we could find a bit of selling around that 1077 level. Good question, Marlo. Let me go back to that. Marlo is asking that if Bitvest is stuck in a range, can one not take advantage of that fact and trade the range? Yeah, you can. But I would trade it only on the long side. So I would put perhaps a buy stop a buy stop order there at 180 and 180, hoping to be taken in as the market comes to retest that support with a tight stop, perhaps just below that low there at 175, targeting that 201 level. And when you get there, you can short it back and target the 200-day exponential moving average. So you can play it like that, but I'd prefer playing it only on the long side, especially considering the fact that the 50 days above the 200-day exponential moving average. So it's better to bet on it on the safe side, rather on the long side, and have your target at 201 and take your profits there, and perhaps wait for it to come back to that 180 level to take a buy there again, and take some profits there 201. However, if it breaks through that 201.50, and then you can start building a longer term position that you can hold for a swing trade. Woolies, looks like we're going to have a death cross there, breaking that support. I think it's going to. I did try to short it on my small account, on the 350 challenge small account. I'll write an article about it and publish it sometime next week. We'll get all the updates around that account. It's also trading with Think Markets. So, but the risk reward wasn't allowing me because I was going to target that 44 Rand level with the stop loss just above around that 52 Rand level. So the risk reward wasn't too great. So yeah, but I think now it has a better risk reward. I'll probably short it to target that 44 Rand level with a stop loss at that 52, just above that 200-day exponential moving average, perhaps even tightening it ever so slightly around that 52 Rand level. But on this particular account, the one that I'm trading here, I don't take short trades. So I'm just going to wait for it to come back above 63. Perhaps I'll rebuild the position above 54 to see if we can't hold a risk-free position up when it breaks through 65 Rand. See if I can't build a solid position when it breaks through that's 3 Rand. It's a fair range. It's quite a distance to 63 Rand. I think it's about 10 Rand odd, 9 Rand or so. Quite a decent range to be building a position. So for now on this account, I'm gonna wait for a long trigger, but I'm thinking of shorting it to target that 44 Rand level. We have an ascending triangle pattern. I got stopped when it closed through that that 50-day exponential moving average, but it's holding the support of the ascending triangle pattern. So when it comes back above that 50-day exponential moving average, I'll rebuild a position with a stop just below that low there. But I'm hoping to hold a decent position when it breaks through 140. If we can break through 140 and I'm holding a nice position, I'd be happy with that. And with Mondi, yeah, Mondi not looking great. Look at that giant bearish bearish flag, and if you target the height of that flag to the downside, let's see where that takes us to around 300, to around that support there. Similarly, with Remgro on the small account, I'll have a sell stop order just as it retests the other side of that support, with a stop loss just above the 200-day exponential moving average to target 327. But on the long side, I am looking at I am bullish on SAPI. Because if you can look at the weekly chart, we have a nice giant cup and handle formation there forming, but also at the same time that worrisome head and shoulders pattern forming there. So let me just delete. There's the neckline there. That head and shoulders pattern there is worrisome. If you can break below that 56 Rand level, that will spell some trouble there on Monday. But I am still fairly bullish on the stock, particularly above 416. Netcare, I tried to break above the 50-week exponential moving average, but fell just right back below. I think I'm going to stay away from health stock for a while. I'm going to wait for it to come back above 17.20 because I don't think it's going to do anything special below that level. So I'm going to wait for it to come back above 17.20. On this one, I was rather aggressive with my stop loss because I had it here and I raised it when it starting to show like it was moving it to in the higher box. I raised it and I got stopped out. So the 50-day exponential moving average is holding pretty well. So I'm waiting for the market to close above that candle there, that last green candle, that bullish engulfing candle. So I want the market to close above that, and then I'll jump back into the position with a tight stop at 1952 on Capitec. With Capitec, I'm noticing that you want to keep the stops nice and wide, because when they sell off, it does sell off quite a bit. So you want to keep your stop nice and wide. So also got stopped on Real Bafokeng, that spike there, touching that 50G exponential moving average. And last but not least on SAPI. Also, SAPI is still stuck in a range. On the longs, similarly to Bidvest, you can have a buy stop around the 37 rand with a tight stop just below those lows. There around 35 rand to target 48 rand. But I personally will just wait for that 48 rand level to close above that 48 rand level to start building position here. But at the moment, it's still pretty range bounded. You could take advantage of that range boundedness with a buy order there at 37 rand. Cool, that's about it. So now let's look at the open positions. EPSA, holding that old resistance nicely as support, bouncing back. If we can get another green candle, that will confirm a 3 white soldiers similar to that one there. I'm waiting for a close above that 165 rand level. Then I'll raise my stop to 156. I won't add to the position because the stop loss will still be below that last entry point. But I'm liking how banks are moving at the moment. And Platts, so it came back to retest that 50 exponential moving average, came really close to stopping me out twice there. I'm sure it missed me by a few cents. What was the low? The 1701.85. So it missed me here by 20 cents, and it missed me there by about 50 cents at 1706.03. Yeah, so that was pretty close. So if it breaks back above 1906, which will be the first time in a very long time, I'll raise my stop to just below that low, around 1974, but I won't rush it. I'll just give it a little bit more time to see if there's any volatility happening there. Aspen, so it bounced off the 200-day exponential moving average with a bullish engulfing candle, confirming the very next day with a gap and drive. So I entered on the very next day because it's a nice holding support there. Kind of taking advantage of that range. I think that's the bottom there. I had a tight stop just below the 200-day exponential moving average. If we break the 200-day, I don't want to be holding that stock because it's a high risk trade. So I want to have a tight stop on a high risk trade, and I'll be building a position as it comes, if it does come back above that 50-day exponential moving average. I want to target that 275. If you can get to that level, if you can break through 275 and I'm holding a nice risk-free position, that would be lekker. That would be lekker. British and American tobacco woke up from the dead. It's been range bound for quite a while. Let me come back to the weekly chart. It's been range bound for some time, stuck, stuck within that range for a very long time. It broke back above that 50-day exponential moving, 200-week exponential moving average, started building the position there, looking quite nicely. So I wanted to close above that close above that close there, that weekly close there around 668. And then I'll raise my stop to just below last week's low, and it looks like we have a bullish engulfing candle here. So if you can get through 669, I'll raise my stop. If you jump back to the daily chart, it's just below that traffic there. And of course, I'll add to the position as well. BHP looking fairly decent. It broke out of a range That was the range there. Started to build a position that came back to retest that old support and held it quite nicely. Looks like it's bouncing back higher. So if it makes a new high close there at 520, I'll raise my stop slightly to just below that low to 476, unless we get an even better place to place a stop loss higher. This came today, tested the 50-day exponential moving. It's been flirting with the 50-day exponential moving average, stuck within that box for quite a while, broke out, but came back came back below that box. But my stop is a fair bit of distance away. So I'm waiting for it to come back above 37 Rand, at which point I'll raise my stop to just below that 50-day exponential moving average. And as it starts to move higher, I'll add to my position and raise my stop loss behind me. Discovery had a nice reversal pattern with a doji there touching the 50-day exponential moving average. At points in the day, it did look like it was breaking out. It came back just before the close. So if it breaks that level, what level is it? If you zoom back, if it breaks that level, perhaps if we can raise it to there, but there's just as good. If it breaks 149, I'll raise my stop loss to just below that low there. It's a nice symmetrical triangle pattern trade on Discovery. It's actually a really, really nice trade booming here. Here when I'm on. Right, and put that there. See, that's where it broke out there. It's still holding and testing there on the other side of that symmetrical triangle pattern. And as you can see, it's classic breakout where it breaks it right at around the 2/3 of that triangle, looking very, very nicely. So if it breaks this, let's get rid of those. If it breaks 149, I will raise my stop to just below that reversal doji there, touching that 50-day exponential moving average. So I'll be just jogging my stop loss for now. I'm looking for perhaps if it breaks there, I'll start adding to. If it breaks above 155, I'll start adding to this position. Glencore had a nice reverse, but holding that 50-day exponential moving average. So I'm gonna raise my stop loss to just below that 50-day exponential moving average, which will be at break even on the last trade when it breaks back above 80.78, unless if this 84 Rand level holds again, hold some resistance before breaking, I will then add on above 64. But for now, I'm going to wait for a new high close above 88. If it closes above 88, entering that higher box, I'll raise my stop to 87 and add to my position. Platinum stocks, platinum, they're starting to look like they turned Kumba, looking quite nicely. Nsibande as well. These platinum stocks are looking quite nicely. We had a golden cross here on Implats. So I started building up a position. So if it breaks 240, I'll raise my stop to just below the 200-day exponential moving average. And as it keeps breaking higher, the next level I'm looking at is at 265. But as it keeps breaking higher, I'll keep raising my stop loss until I add to my position. This week I was starting to think the party was over on an Investec, but the 50-day exponential moving average held at that area of supply and demand. You can see there was a tight range there. There was a ton of supply and demand that came back. Buyers coming back to buy the stock. So I'm waiting for a close above that 90 Rand level. So if we can break through 90 Rand level, I'll look to raise my stop and add to my position, perhaps to around just below that last entry. But I won't be adding to my position as yet. But looking quite nicely at the moment is Investec. It's my second biggest holding at the moment. Liberty started building a position when it broke there. It looks like it stagnated yet again. So I'm going to raise my stop to just below the doji there, just to implement a bit of a time stop. So because I think if we take out that low there, we won't be running any further. But if it get a close, basically I was waiting for a close above 98 Rand level to raise my stop to 93, just below the dojo. Had a bullish engulfing candle there. But let's see if we get a green close tomorrow, I'll then raise my stop loss. The 50-day 200, the 50-day exponential moving average came back to rescue on Mr. Price. We had that looked like a reversal kangaroo tail there, which confirmed traded below that low there, to retest that 50-day exponential moving average. So I'm going to wait for it to come back above 213, and then I'll raise my stop loss to just below that, unless of course we have a better level to raise a stop loss to. The level that I'm waiting for is at 237. If you can break above 237, I think we'll then start to see the stock really run. MTN, I'm going to raise my stop. This is another trade. This is my largest holding in the portfolio at the moment, and I'm going to add to the position tomorrow. Excuse me, and raise my stop to just below those lows there. Nice bullish breakout there. And a new relative high close there. But I was waiting for the 175 Rand level to add to my position, but I think I'll just add. I think there's a fair bit of strong momentum. Let's look at the volume. How was the volume today? If it was an increased volume. So yeah, I'm going to add I'm going to raise my stop loss to 175 and then add to my position. It would be so you can watch out on the shopping list mail for MTN as to how many trades how many shares I'm gonna buy here. But I think I'm going to put up a 10% risk or 8% risk on this position because I'm already up 62%. NetBank, nicely holding that 50-day exponential moving average. I'm waiting for a close back above 189 to raise my stop loss to 175. I won't be adding to the position as yet, as the stop loss will still be below that last purchase there. So I'm going to wait for my stop loss to be above that last purchase to add to my position. I don't want to be adding to losing positions. Northern falling back below the 200-day exponential moving average, but it hasn't taken out that prior low as yet. So I'm gonna hold that for now. So I'm waiting for close above 238, and I'm sure my stop loss at that point would have been above my last entry point, and then I'll add to my position. Pepco came back to retest the 200-day exponential moving average, holding it fairly weaky-ish, but we'll see. It's quite close to stopping me out. It's not very far. As you can see, the market's now changing that to red, letting me know that the market is quite close to my stop. So the level that I'm waiting for here is that 25 Rand level. If you can back above 25 Rand level, when I'm still holding my position with particularly risk-free position. I'll be happy. But I think since it broke below that 50-day exponential moving average, I'll be stopped out, and it will come back to test the support of that trend line there, which would probably mean a nice buy as well. An ascending triangle pattern on red merchant. The support of the ascending triangle pattern held quite nicely. I'm waiting for a close through that 71.21 top line resistance there. If you're trading with targets, 52 is a nice target, which is the height of the triangle from its broadest point, with a stop loss around that, just below those lows there, around the 50-day exponential moving average. So that's all came back to life. I will raise my stop loss since I was waiting for a close back above that level there. So it did today, ever so slightly. So I'm going to raise my stop loss to around 283. So I'm going to wait for a close above 277 to add to my position, so that my stop loss is above that last entry point there. SureBright, breaking below the 50-day exponential moving average today, but my stop loss, I'm comfortable. It's still a fair bit of distance away. I'm waiting for a close back above 211.80, at which point I'll raise my stop loss to around 200, unless, of course, today's low gets taken out, at which point I think I'm going to get stopped out. But if this holds today, I'm going to wait for close above 211.80 and raise my stop loss to around 200 and add to the position. Again, on the 50-day exponential moving average coming to the rescue on Standard Bank. So I'm waiting for a close back above 148.58 to raise my stop loss to just below that 50-day exponential moving average. Again, the stop loss will still be slightly below that last entry point. So I'm going to wait for a higher break to add to the position. Towards still, it found some selling around that 60 Rand level. I'm going to wait for a break back above, back above 60 Rand and raise my stop loss to just around that 50-day exponential moving average on Truewords. But I'm waiting for that 67 Rand breakout there, at which point I'll add to my position, because I know my stop loss will be above my last entry point. Vodacom. So Vodacom came back. So it broke out there, started building up a position there. So that I use that candle for resistance. So it broke out yesterday, started building a position. Looks like it wants to come back to retest at 137. So I'm gonna wait for 144 and 150 to either raise my stop loss or add to the position. That's it from me this week, guys. If you have questions or charts that you want me to look at, I'll feel free to pop them in the Q&A box or the chat box. If not, we can park it here. The video will be up on YouTube, on the VillageTrader YouTube channel in a couple of hours. Guys, do subscribe to the channel, hit the bell notification button so that you get notification when the videos are up. And do subscribe on the VillageTrader VillageTrader mailing list. The link is on my pinned tweet on VillageTrader ZA. Do follow me there as well. Or at villagetrader.co.za. On villagetrader.co.za, you can sign up for the mailing list that way. Marlo, it's a pleasure. Figile, it's a pleasure. Yeah, I mean, the market were quite. There was blood on the streets on Monday, on Monday and Tuesday in the markets. Both our market and the US market was bloody. It was truly bloody. So yeah, we survive. And I think the key to survival in these kind of markets is really small positions. You don't have one position that take you out of the water, because times like these do happen. And also, and the last thing, when you take a bunch of small positions, when times like this happen, you don't get hit too hard. But if you have big position in times like this, do happen, you get hit quite badly. So when positioning sizing, also consider the possibility of being stopped out consecutively in a short period of time, hurting that kitty. So your goal is to protect your capital the best way you can, and the best way is having a stop loss and small position sizing. You can build a position over time as it goes into profit, but to start off with, man, take small 1 or 2% risks on position. Don't go too large. Guys, thank you very much. As I said, the video will be up in a moment. Thank you again. We'll do this again next week. Apologies, I wasn't feeling well last week, and the podcast, as a result, it wasn't out. But the podcast is gonna be back next week. And we're gonna be back with Follow the Trader again next week. Otherwise, guys, have a great evening. We'll chat again next week. Cheers.